What's going on, everyone? This is Jordan with Conquer Trading and Investing. And in this video, I want to give you a behind the scenes look, an inside view into what it's like working with me inside my Conquering the Markets Forex Trading Academy, into my online course where I help you become a profitable trader. Now, this course is like unlike anything else you've ever known or seen. And why is that? Because you get to work directly with me. And I'm going to give you a preview of that right now. Now, this course, which covers everything, goes on. It gives you not only details of a rule-based system, my rule-based system, buy and sell criteria and entries, where to place your stop loss, where to take profits and move your stops, how to choose the best setups, but also what type of position size and risk per trade you need. It really gets into details in trade management. This is something that could benefit everyone, whether you're new to trading or whether you have many years and a lot of experience trading. Now, in this video, what I'd like to do is kind of share behind the scenes a little bit of the one-on-one mentoring with me and what you would get out of this course. So I do invite you right now to go ahead and get that glimpse behind the scenes and see what it's like in working with me and how that would really benefit you and your bottom line. Hey Jason, how's it going? Want to get back to you, take a look at these charts you sent over, look at these questions. Now, starting here with risk, you said that you feel more comfortable with trading a 0.5% on trade, and I have to agree with you. I think that is the sweet spot. I highly recommend that over actually 1%. So I really support that. Not only support it, I like it. Now you're saying that once you feel more comfortable, you can move up. That's also good. You can make quite or yearly return just trading 0.5%. It also gives you the ability to actually, instead of take more than one particular trade, to take more, right? Because instead of trading one currency pair at a time at 1%, once you feel comfortable trading a 0.5% total risk per trade per currency cross, you could trade either two or three, one, two, or three. Your risk is only maximum 1.5% that way. So it's a really good way of kind of diversifying as well. As for two or three positions, you're not sure how it really matters. I have to tell you, the difference for me is this. When my stop loss is further from entry, what I generally do is enter in two positions. And when my stop loss is tighter, I enter in three positions. That's basically the difference between me entering in two pieces or three pieces. I should say, rather than positions, pieces, right? Because altogether it's one position. So when my stop loss is pretty far from the entry, what I'll do is I'll go ahead and I'll enter that in two pieces. And when it's closer, I enter that in three. That's basically what I do. Now, the main advantage of entering, and we'll get into that in just a bit in a moment, in multiple pieces, is that it gives you the opportunity for the more important piece of trading and managing trade in multiple exits. All right, trade management, that's what we're getting to next. I have none, so that's fine, right? You're going to get it. But that's is the main reason for entering in multiple pieces, because it gives you more flexibility in managing that trade, right? If you notice one thing about trading is that new traders or even experienced traders, they have a tendency to take profits quickly and hold on to losing trades. You want to flip-flop that. All right, you have to do that mentally. You want to get rid of your losing trades quicker and hold on to your winning trades. All right. So the 8 hour is really important for many reasons. There's a video that I could pull up for you on the Trading View channel, on the Trading View under my profile, that talks about why it's the best time frame to trade. The strongest reasons are that breaks a day down, a 24-hour day, into three signal periods. Being that Asia's avoided, that's only two signal periods, right? That gives you freedom to have a life and not be glued to the screen. Number one. Number two, it filters out a lot of market price fluctuation and noise that you get on the 4 hour time frame. All right, so it's really important. So I'm glad that you're open to do that. It's going to make a big difference. You feel much more. So as opposed to the daily time frame, also, where the daily time frame is actually a little bit more difficult to trade than the 8 hour. The 8 hour catches moves, right? So you're more comfortable on a higher time frame. That's good for the 8 hour. So keep doing your analysis on the daily, weekly, and monthly, and then come down to the 8 hour for those trades. All right. However, right now I am in the FTMO. I'm not familiar with that. If you got a link, that'd be cool. So I could see what that is to get funded, so that I had to adapt my trading to the okay. Good flexibility as a trader, that's fine. 10% a month's not easy to do, for sure, especially without really levering up that leverage. It's going to be hard to get 10%, right? But as long as I don't break the drawdown criteria, I'll get pushed over next month. Send me a link to that just so I could see what their criteria is in order to get funding, what you need to do. Maybe I could help you develop a strategy around that would work in that type, whatever type of criteria they set forth. So definitely send me a link. I'll help you out with that as best I can. Also, let me know what you're doing. You could make a great living on the 1 hour and or 4 hour. It just takes a lot more focus and a lot more attention and a lot more time in front of the screen. It's for those reasons it's more difficult. Now, could I stall the 8 hour on MetaTrader like in your video within 100%? You can. I not only trust, Oanda's fantastic. Oanda's been around for a long. I started trading with Oanda in 2000, 2001. Traded with them for about 7, 8 years. They are a super fantastic broker, but you know their FX trade their FX trade platform gives you the ability of basically a cent account because they use units and because they don't use lots. So whether a smaller account risking 0.5% and entering that in 2 or 3 positions, you could do that no problem with Oanda FX trade, no matter what size account you're trading. So that's an enormous advantage. You could do your analysis on Oanda MetaTrader 4 on the 8 hour, right? And then enter on the FX trade. You can do that no problem. All right. How do you determine a trend? All right. So this is okay. Hold on 1 second. We're gonna get into that in a minute. I was reading that because I hadn't read this beforehand, so I'm gonna pause this for a minute, read this, and then come back and explain with you. All right, Jason. So I literally this is well thought out, articulated, explained. I literally took about 12 seconds to read it, which means that I didn't read it all. And here's the reason why. All right. So what determines a trend? So here's how you determine the trend. I see on your charts right here you have both the trend BTC and the true trend 70-30 savings. Okay. Now, generally speaking, you want to use one and stick with one. Okay. Otherwise, you have conflicting signals. And here's the thing. Trading is really complex and difficult. By adding multiple indicators, by adding multiple indicators such as whether you're using fibs, whether you're using the MACD, whether you're using whatever oscillator, whether you're using by adding all these different variables, you add conflicting signals, right? So with something so complex, here's what you need to do, Jason, and you need to do this. You need to make things as simple as possible. All right, let's start as simple as possible, and then if you feel at any point that you could add to it in order to improve upon it, you can do that with my full blessing and support. But in the beginning, Jason, you're going to be more successful if you just wipe everything away. You don't even have the true trend or the true trend BTC at this moment right now. I want you just to have price. I want you to keep doing what you do by adding your support levels on the daily, on the weekly, and the monthly, as you set me in the first charts, right? Right over here, 4 hour. Black, I know that's 4 hour. That's perfect. You could keep that there, right? And you could, I don't care if you just use the weekly or the daily or the 4 hour, right? Because to me, support is support and resistance is resistance. But that's cool. You could do that, but nothing more. All right. I want you to add in your support and resistance on your chart, and then I want you to focus in on the 8 hour to find entries. I want you really simple. When you're right over here, right? Let's talk about simple. Right over here, this is the 4 hour. Fine, right? You have this resistance here, which is broken. Come into the first available resistance. Again, tested. Came back down and this support held. This is your entry long. This is your entry long. This is your first. I'm not going to talk about trade management with you just yet. I'm going to get into that next. And I'm glad you know that you need to work on that. Fine, I'm going to help you on that. But first things first, we need to dumb it down. So how do you determine a trend? All right, here's how you're going to determine a trend right now. Now I do use the true trend, and whether I'm using, depending on the strategy, if I'm using a 70 period or the 333 period for the Bitcoin, for the BTC, true trend BTC, that's the trend. Above zero lines an uptrend, below zero is a downtrend, right? Am I finding but by doing that, am I able to get the exact top of a trend and bottom of a trend, turning point? No, that's impossible to do. The best you can do is keep things simple. Above zero is an uptrend, below zero is a downtrend. Am I catching the turning point of that trend at the highest point? Never, never. But you're able to ride a trend that way. I don't even want you to do that right now. What I want you to do, you need to simplify. So you need to keep doing your support and your resistance on the time frames you do them. That's good. That's fine, because even if you're trading for your to get funded, you go down to a 1 hour time frame. The same support on that monthly, on the 4 hour, or the daily is relevant on that 1 hour time frame that you're then trading. Remove these indicators. I want you to focus in on price. I want you to buy off support and sell off resistance. And here's how I want you to do that, Jason. Is this an uptrend or a downtrend for your purposes? Well, the chart starts at the bottom left and is up on the upper right. That's an uptrend, right? Pretend you're asking a 5-year-old, is this up or down? And they'll tell you, right? What is this? This is sideways. You see it? This is sideways on a 1 hour time frame, right? What's this? This is sideways also, slightly up. All right, that's how I want you to think. We're going to dumb it back. Even for your competition, I think you're going to be better off trading off the 8 hour than you would off the 1 or the 4. But we could take a look at that together if you send me those details. All right. So here's a couple of charts you sent. Now I see these are labeled as Australian dollar, Japanese yen, 1 hour, and 4 hour, and again 1 hour. Trade A, trade B. I was sent the Euro US dollar, 4 hour, 1 hour, and 1 hour. All right. So I'm assuming this is what we're supposed to be looking at, and take a look at them. This is real simple. 4 hour time frame, uptrend. See this is trend line resistance coupled with this support. When did this become support? This was resistance. This broken resistance into the 4 hour nearest resistance, came back down into support. You buy off of support. Stop loss here. You can have your first take profit here. I would like to talk, since we're here, I would like to talk about managing trades. If you entered, this is a tight stop loss, right? Your stop loss is down here, perhaps below here, right? You're looking to take, if you entered this trade in 2 pieces, I know I'm covering a lot, you could handle it. You could handle it all. I just need you to simplify. If you entered this trade in 2 pieces, the first, as you came into the nearest resistance, which is here, you take the first piece off, move your stop loss to break even, and now you have a free trade on your hands, and allow this to go and see what happens over here. Does it roll over and get rejected? Take your profit. Does it burst through here and go up to the next resistance, right? That's what you need to, that's only a glimpse. I don't want to get too much, but that's what you need to be looking at. Here we're looking at the 1 hour time frame. You said this is the 4 hours in an uptrend. I don't want you to focus in on multiple time frames. I want you to pick a time frame and trade it. All right. I prefer the 8 hour. And at support, sorry, since the 4 hours in an uptrend and at support, go to the 1 hour, wait for the retest of the 4 hour support and resume up. Take that trade on the candle. Right. You could do that. Right? Like, are you saying, should this be your entry here? Yeah, it's so hard to trade though, Jason, because you need to stick in front of the computer and you need to be glued. And the more that you're in front of a computer watching the charts, the more chances that you're going to take more trades that you shouldn't take, right? Come back to the 4 hour, wait for the 4 hour to make the higher high. Do you have the better entry, the lower one? No. Do you have a safer one? Probably. Since the 4 hours in an uptrend, the one's go with. Oh, you're asking which of those 2 trades you should have took, right? So that's a good question. You're asking, looking at both of these, which signal do I take? Or do I wait for it to break above the local resistance, come back, test it, and is that where I take it? Not this one. This one, if you took the initial one, whether the entry was down here, right? Right here was the entry. And then you're in this trade and then comes up and then test this broken local resistance and it holds a support as it rooms up. Do you add to your position? That's a whole nother style of trading. That's where you would add. The first entry I like down here. All right. This is a good way to see the market. This is more of maybe, right? If I enter down here, Jason, watch this. You got this. Your understanding of market, I don't want to say structure, is very solid. You see if the first entry was down here, Jason, and now you came back up, you broke out over here, you came back, you tested it. If this failed, you could you could take your stop at break even. If that failed, if it holds, right? All right, well, even still, once it resumed upwards, you could prematurely, if you were glued to the screen watching this 60-minute chart, you could also move your stop to break even, knowing that you're now in a free trade. I wait to here. I give it the room. I give my trades room. I have my stop loss in, whether it's here or here, and then I don't make an action until I test up here, until I'm stopped out, or I test up here. At that point, I'd take a piece off and also move my stop to break even and watch the price action now. If we then came off here and failed, maybe take the full piece off or maybe give it the room it needs. That's a lot for today. That's good. Wait for your response back and we'll keep going.